Hello and welcome to Mint. In this calendar year, Indian equity market has witnessed a record inflow of funds from foreign institutional investors, that is FIIs, around $20 billion. And this is the second largest inflow since the market was opened in 1993. In 2010, the record inflow was $29 billion. And I'm joined by our staff writer, Krishna Merchant. Krishna Merchant, welcome to the show. I just want to ask one simple question. Why? What is the key driver of this record inflow?
So, Sanjay, a lot of things have happened in the past 1 year. There were two long-term open market operations by the European Central Bank, which led to cheap money from Europe flowing into India. Last week we saw a rally in the Indian markets. Rather, since last 4 months you've seen a rally because the finance minister along with the prime minister have been talking about reforms and have announced a slew of reforms which obviously have seen logjam in the parliament. But in the last week there was hope that this FDI and retail issue might get resolved and the government may able to pass the bill to allow foreign retailers to invest in India. And also there are hopes rising that a lot of reforms which were that did not see the light of the day will probably see going forward, especially the mining bill and the land and acquisition bill. And the other thing that finance minister has spoken about is the National Investment Board, which is probably going to happen very soon, which will probably be a clearance body for most of the projects which are seeing, which are halted as of now. So that is also expected. So as a result, obviously FIIs have pumped in so much money because the returns are also good. Sensex is up 25% year to date, and the rupee has also weakened so much. So once the rupee strengthens, the returns that they get double up. So that is the reason.
Krishna, one interesting question would be, I understand India is in a crucial juncture where a lot of reforms are pending and government is actually actively pursuing it amidst of a lot of protests from the opposition parties. But my question would be, do you think that this rally is going to be sustainable in future?
True. The rally, if it's sustainable or not, depends on many factors. The market is expecting that the reforms that the government announced, the bills which are pending, will pass through. If that does not happen and the parliament continues to get adjourned, then obviously the markets may see some profit booking. Also, there is expectations that the Reserve Bank of India may cut interest rates in January. So we need to see if that happens. It all depends on the inflation trajectory. Inflation has marginally eased, but not in the Reserve Bank of India's comfort zone. Also, we need to see what's happening globally. As of now, there is a concern that US may not be able to avert the fiscal cliff, that is spending cut and tax increases, because there's no consensus between Republicans and Democrats. But if that does not happen, then that may cause the US economy to slip back into recession, and we are highly dependent on the global markets, at least in terms of our export growth. So if that happens, again, we might be affected a little. But yeah, these things suggest that it is on all these factors that markets may sustain, and if obviously one of the negatives over there, then market rally may lose steam going forward.
So Krishna, you are suggesting that investors at this point of should be like cautiously optimistic or cautiously pessimistic, and I'm just wondering.
Investors should be cautious at this juncture because some of the stocks have rallied quite a bit. Like for example, BSE banking index is up 54% year to date, but non-performing assets continues to rise. So they need to see the fundamental factors, see how much the stocks have rallied, and also the price to earnings multiple before putting money in the stocks.
Thanks, Krishna. There we are. India is in a crucial juncture where policymakers are busy in clearing their pending reforms, and of course India is also exposed to various external vagaries, and FIIs at this juncture are putting a lot of money, and our experts are telling that investors should be cautiously optimistic and waiting and watching. For more in-depth stories, please log on to www.livemint.com.